Hello, I'm Jeffrey Ham, equity analyst for Briefing.com. Today is Thursday, August 28th. Thursday marked another low-volume session for stocks, but the lack of buying conviction didn't stop the major indices from trending more than 1% higher to conclude near their session's best levels. The advance was prompted by encouraging economic data, retreating oil prices, and leadership from the financial sector. Trading volume on the NYSE failed to break 1 billion shares for the ninth straight session. Volume typically exceeds the 1 billion shares mark with relative ease. The lack of trading suggests there may be little conviction behind the stock market's recent moves. Nonetheless, the session's advance remains pleasing to bullish investors. Stocks took off early following the announcement of second quarter GDP data. Growth was revised upward to 3.3% from a previously reported 1.9%. Exports and personal consumption played a key role and suggested the economy is faring far better than many headlines suggest. Additionally, trends in the data suggest third quarter GDP will expand at a similar rate. Initial jobless claims for the week ending August 23rd fell 10,000 to 425,000. Meanwhile, the 4-week moving average retreated a bit. These numbers reflect soft labor conditions and indicate a modest decline for August non-farm payrolls is likely. Crude futures climbed as much as 2% early on, moving higher on fear that Hurricane Gustav will disrupt oil production in the Gulf. As those fears subsided and a larger than expected build in natural gas inventories was announced, oil dropped as much as 3.4%. It closed more than 2% lower, near $115 a barrel. Crude's retreat pushed the energy sector into the red. It was the only sector in the S&P 500 unable to post a gain. Softer oil prices helped consumer discretionary stocks. Specifically, retailers fared well, although their performance is also attributable to a batch of better-than-expected earnings per share results from group members Genesco, Coldwater Creek, Men's Warehouse, Tiffany, and Zale. The session's prevailing sense of optimism helped participants look past mixed outlooks from several of the retailers. Even Sears Holdings climbed higher despite missing the consensus earnings per share estimate. The financial sector was the primary beneficiary of the session's buying efforts. It closed 4.5% higher. Fannie Mae and Freddie Mac were a couple of the highest flyers, though. Fannie announced last evening it is shaking up its management team to control credit losses, conserve capital, and provide liquidity to the mortgage market. Of the major indices, the Dow posted the largest advance. Its only component to finish lower was Coca-Cola, which was downgraded at Credit Suisse to neutral from outperform. I'm Jeffrey Ham for Briefing.com. Thanks for listening and have a great evening.